Hello Forex, this is Naeem Aslam. Welcome to our daily update on coronavirus and its influence on financial markets. The global lockdown continues. Two more countries have joined this, New Zealand and Thailand. But let's go back to fiscal policy. That 2 trillion worth of fiscal aid package passed from the Senate and now it is on its way to House Representatives. It is likely that it will pass from that as well, despite Bernie Sanders' remarks. Nonetheless, when we focus on the equity markets, the Dow surged over 2% yesterday, while the Nasdaq was the weakest index. Now, folks, remember, when we compare the three indices, Dow, S&P and Nasdaq, it is the Nasdaq index which is the most strongest index among all the three major indices. Now, given the fact that we are not seeing the momentum going into Nasdaq but in Dow Jones, it makes me worry that something is out of whack. Because of that, I'm not fully into the market. I'm not fully buying this rally that we are experiencing. As for the commodity markets, gold is in its constant battle with that 1600 mark. Now, if you look at the daily chart, you can see the price is also struggling to stay above the 50-day moving average. If it stays above that, all good. Then it is likely that the price will continue its journey to the upside. But when it comes to oil, I'm still failing to see that huge momentum. Although there are some rumors in the market that perhaps the US is going to add pressure on the ongoing supply war by saying to Russia and Saudi Arabia to break this war and start curtailing the supply. Because remember, we've discussed this, that the oil demand, which is heavily influenced because of coronavirus, it is going to erupt minds of these what we call defaults in the energy sector. So we really need this particular sector to start performing well, and that can only happen if the supply war diminishes, meaning if there is a ceasefire and we don't see extra supply coming onto the market. That's all for today. See you guys tomorrow.